All right, my bad, my bad. Anyways, like I said, if anybody did not see that this video from yesterday, I pretty much went over both EU and GU. Pretty much entry one, entry two, and pretty much comparing how, like I said, both although they both presented an opportunity, one of them was technically more conservative because one swept a solidified low, solidified high, whereas one technically just broke the low that led into the high. So there's a bit of a nuance to the entry here, although they're both considered right technically equal high sweeps. So they present the same setup from a fundamental standpoint and a overall basic standpoint, but the little small nuances could really make a difference that would consider maybe one conservative, one aggressive. And then the next question is which one should you take? And like on paper, it sounds like you should take the conservative one, duh. But just because you take the conservative execution does not mean you're gonna get the you're gonna that doesn't mean you're gonna yield the better result. And if you don't yield the better result, right, and you end up let's say hitting a break even, then it may be more mathematically in your favor to potentially want to take the aggressive entry rather than the conservative. But then again, you might take more losses because of the aggressive entry. But in then the other aspect is like there may be much less trade frequency with the conservative strategy. So like these are the questions that like bother me that you can't really test unless you have all of your rules completely to the T and you can really break it down super deep because like I said, both of these are sweeps. Both of these swept equal highs. Both of these presented an internal transition. But there's a very different approach to taking this versus taking this, and I discussed that in the video. Um, but other than that, the gist, well, those are kind of just continuing to play out from yesterday. But the gist is right that we're looking for a reversal because of what happened to dollar, which is here. Right? Because dollar gave a major sweep to a very substantial low because it's on the daily time frame, and this was about what like 4 months ago, almost about 4.5 months ago, 5 months ago ish. So just because we're sweeping that much of that high of a low, I just like I've always told you guys, it doesn't make sense to take an immediate continuation after you've seen a major point of liquidity be swept. So like I said in that video, we're kind of referring to see this kind of be taken out. And then if we have a transition here, then we're then looking for downside. But really, if we're going to follow the first bias that I talked about, which was this is like a bias that I had like, when is this like late 2025? Yeah, late 2025. Pretty much coming into the year, right? Where if we see, let's say this is the final push down, then if we see a break here, we see a transition here, and then we see structural disruption, then obviously I would then look for a potential move to the upside. But all of that is gonna take some time. Like this is like a couple weeks into the process. Like this probably won't happen anytime soon. But but yeah, it's just I just like thinking about this stuff and then playing based on the reaction, right? I don't want to really keep a bias. But either way, this is kind of playing out. Daily sweep, internal intraday failed. And because the internal intraday failed, that's what we've been playing, right? The reversal scenario. And so that's continuing to play out right now. I do see this at least one of them taking out these lows, probably EU, hopefully by today. But if not, I might just take off some volume and just hold over the weekend. But other than that, it looks like dollar is finally seeing a pretty big bounce. And because of this big bounce, that means that the weekly is, you see what I'm saying? It's a bit iffy. It's a bit, it's iffy in terms of the continuation to the downside, even though the momentum still is to the downside, even from let's say a major intraday slash swing POV, because all this break would do, right, is solidify high into low, and then we would obviously continue down. But the weekly closure could then become a catalyst if you have a major intraday structural disruption, like I said, and that would favor more so the upside. But either way, that's a bit. I don't want to make that sort of like a prediction, but it's just like if this then that, then um yeah. Other than that, we have a eh monthly closure, just like there's nothing really too, nothing, not really too much information. Like I don't really care that this closed underneath like the previous range. Like I don't really care for stuff like that. This one finally seeing a big drop here. It's about that time. Personally, I want to see this start to stall out and like give me a pullback, start to stall out, like definitely come back, start to stall out, and then let's go for another round of accumulation. Um, but based on how this is going, I don't see this stopping. Like I definitely want to see this at least come back into the 4500s. And then an interesting one. Does anybody follow crypto here? Do you guys remember the prediction we had for crypto like weeks ago? Like weeks ago. Anybody? Does anybody remember that? We pretty much been bearish the entire time. We have no reason to be bullish on that stuff. Like you guys know, I've never really been like a crypto guy, but we're finally starting to see this bias play out. Like I called this out like probably a couple of weeks ago. Um, back when like Price had first done this, like this year, right? Because we had a very clear weekly inefficiency here. Um, but trading it wasn't really the easiest thing to do, especially from ETH's standpoint, because from ETH's standpoint, right, this is still technically bullish, right? If we want to consider that an LGC, and this is still technically bullish. So there is still a chance that like see something like that later on. But the only thing that's concerning here toward the reason why I'm still have to continue to be bearish with ETH is like this all-time high sweep. So we swept all-time highs, and just from there we've kind of just been starting to give some bearish moves. And based on the bearish moves, we're still continuously bearish. Like there's this, I don't see this stopping like anytime soon. Personally, like I would love to see because we swept that weekly high, or I mean, yeah, I would consider it a weekly high. I think it's reasonable to assume that if we're to continue higher, like at the bare minimum, like we have to see this low be swept. Why? Because we swept equal highs, the fuel has been taken, and we're starting to give some bearish momentum. So now I would need some more fuel to then hopefully get some movement to the upside, right? Same thing with Bitcoin. Like I'm not technically bearish like full time. Like I want to see this die, but I have been bearish ever since, especially because of that 6 month closure. Sorry, I believe I covered this in one of the first zooms of the year. But yeah, we had a pretty big bearish engulfing. So because we had the bearish engulfing, like at the bare minimum, I want to see right this 6 month low be taken, but overall, I want to see this whole range be taken, which is the green line, because that way we have our bullish sweep. All right, want to see the bullish sweep come into play. And then if we have a bullish sweep, then we have a very clear target with TP1. And then the only reference point we would need to see is like here. All right. But either way, if we have a sweep here and then we start to see momentum clear this, then I would more than likely like to see equal high. I mean all-time highs. But for now, we've been bearish. I'm still going to be bearish. But it's really nice to see this stuff play out. Like if you guys have been following this and taking notes of like everything we've been talking about, then we have we've seen a lot of these biases kind of just play out over time. The only one that was weird for a bit was DXY, but that's because of what we were looking at with the schematic. So we're here with the schematic now, and we're seeing kind of just a sweep on sweep on sweep. So we're stuck in a range. So I'm hoping to see hopefully a transition here next week, or a any type of structural disruption on a major intraday scale to then hopefully see some more upside. But yeah, other than that, there's not too much to cover. something that I was talking about yesterday with during the case study that I made free was trying to narrow things down to not just a first principle standpoint, because we can obviously break rules down really efficiently, but something I'm going back and forth on is whether or not to categorize what we consider to be market laws as part of every concept that we use. Like, for example, what I was looking for in my notes for the people that saw that is I was looking for um this call that I had with Brendan, because the way that he put his market laws, I really like how he worded them, although they're very aligned with what I have. Right. So if you guys don't know, right, these are like my market laws based on the suite model, or the suite blueprint, sorry. They are here. Right. These are my rules, right? And I really like how Brendan worded his. These are his right here. Right. And I think these are very, like, for example, we consider these to be true, but for them to be universally true across every strategy and to consider them to be true for every single strategy, I don't know if that is to potentially sway certain models from operating. But for the most part, I think these are relatively like unbiased views in terms of quote unquote how markets operate. And obviously nobody has the code cracked, but this is kind of like the closest thing I have to like having like a universal framework um for the markets, at least from a logical standpoint, maybe not from a technical standpoint, because obviously from a technical standpoint, everything is market structure. Especially if you use candlesticks or just any representation of or any of these views, really. Right? Market structure is kind of just everything. And the cool thing about then these rules is like, yes, they go hand in hand with our style, but I don't know, like I said, whether or not these fundamental laws that we've placed are universal throughout every single trading method. Because let's say we're trading, I don't know, we literally any other style that isn't liquidity based. Like, let's say you trade like an Elliott wave or like a I don't know, some of like traditional support resistance Fibonacci methods. Like, if you are to install these principles, are they to work? I don't know. That's why I said I don't know. Or that's why I said that I don't know if they're universal across those, because I don't know if those types of rules will be swayed by this in a positive way. But that's kind of now the next phase to trying to find a universal way to put our concepts into a raw articulable definition, right? So the so yeah, that's kind of like the next part of the dilemma that I talked about yesterday. Human psychology creates predictability. Yeah, so like so markets are algorithmic. Yes, they're built with algorithms, yes, but the algorithms are human made. Therefore, human psychology creates predictability. So if the algorithms are man made, then therefore they must be predictable. And they are. And we see that day to day, right? But the actionable part, the trading part, the execution part, that's really where the game is. But overall, these laws are kind of universal in my opinion, but I just need to figure out if that makes sense statistically, or if it's responsible to say that statistically. Clarification on statically inefficient. I'm not diving into it. You're gonna have to look that one up, bro. Or actually ask Brendan in the private chat. Ask him what he means, because if you watch his stuff, he talks about it a lot. If you don't watch his videos, you're not gonna understand that, because he posts his videos um in in his channel, obviously in the private group. But yeah, that kind of concludes that. If you guys want to see the if you guys want to see the all of the befores, right? I posted them in the review yesterday. And also if you guys can, like, give this a like, give it a comment. Like, I don't want to be that guy, right? But I'm definitely gonna start trying to post more types of videos, but I just really need to find, like, I don't want to just do them just to do them. Like, I want to do something that I'm thinking about and it makes sense for me to talk about. And it's something I want to do, right? So I don't know like what kind of schedule I want to be on, but I want to do these like as long as I enjoy them. But so either way, if you guys enjoy them, like, give it a like, give it a comment, like, ask a question. Like, I'm not that hard to find. So like if you guys ask a question on here, I'll probably answer it. But yeah, other than that, we have released like the beta version of Cove, right? We've added like some of the wallet features, we've added some of the we've kind of done some refinements on the agent side for all of this stuff. And this beta version is going to be available to the public, I think, in like a week, 2 weeks, I think. So I'm gonna make like another announcement for that. I'm gonna put that in the Cove channel in the Discord. So definitely be ready for that. Um, and just in case you guys want to know, what are you and what can you do? Just so you can see. Actually, oh, that's the wallet feature. Sorry. Yeah, there we go. Bro, that's the public chat, brother. He's not gonna answer in the public chat. No, bro, the private, the premium chat, bro, the premium chat. Like, if you go to the premium lounge, you feel me? I've always wondered what criteria were used to design the algorithms, who chose this or that type of code line or other to make it so precise. What do you mean? What do you mean? What are you talking about? The market is not one algorithm. Just because something is algorithmic does not mean that it's one algorithm doing everything. Like, the closest thing to like that type of, like, what you're trying to talk about is like acting as a market maker, but market makers obviously can't trade. Like it'd be a conflict of interest because they're the ones moving the markets to fulfill certain orders. That's why, hence, the markets are manipulated. But I don't know if you're like, I don't know what you're referring to. You copied the message, bro, but you didn't, like, your at didn't work. Like, I'm gonna need some more clarification on what you mean. But yeah, this the beta for this comes out, um I think, like I said, in 1 or 2 weeks. I wouldn't ask it like technical tech, like TA stuff, because I'm not gonna implement like my strategies on here. At least not until like I'm able to automate them. And then that would be like a feature for like the pro version. Um or like it's actually gonna be like a pro version and then like a even more expensive one for like auto traders and any kind of agent that like actually provides like some type of yield or some type of estimated yield. So I wouldn't really ask it anything in terms of like TA. But from a data perspective, you can start to try to figure out some patterns, at least from like the crypto side. But yeah, that's that. Um, I don't really have much more to talk about outside of that. It's been kind of a busy week. I'm really trying to work on some side projects. Um, Trying to simplify like my processes with like RCV and like making more content in an easy way, and like trying to split up the videos, and then also trying to build my solution for um build a solution for trying to figure out this method on how to actually automate concepts so that you can automate concepts so you can build models and then actually have auto traders, or at least have a deeper understanding of what your rules mean and what you're assuming. um but yeah, other than that, we can get into case studies and any questions or concerns. Okay, nice. Nice, good little continuation. Where are you putting your SLs though? Like, let me ask you a question. Would you consider these the same model? Updates on ASIF? Nothing yet, bro. Nothing yet. Let me see actually where that account's at. Where's my phone? Oh shit. So like, are you like, do you consider both of these to be the same model? If so, like what model? Um, okay, so it's just about to hit 52K, which would be it's at about 37%. Not bad at all. We haven't turned it on too much this month, just because the conditions haven't been the best. The model's LGC, yeah. So you're trading the same model on both. Is that what you're telling me? Because yes, this is the LGC in terms of bias, but I'm talking about in terms of execution as well. It's just a yes no question. Like, do you consider these both to be the same execution model? That's pretty much like just simple yes no, or like it also depends on what you consider the execution here to be. Like, do you used the LGC for the entry? I mean for the bias, sorry, but like for the entry as well, or like what's the reason for the entry? And like what would and like do you consider both of these to be the same? That's kind of like all I want to know. No answer? No? Do you get what I'm saying or no? LGC for the bias, SD for entry. So yeah, same execution model. Okay. So this is like the problem that I'm trying to solve. Like this is like a great perfect example because like you're using the LGC for bias, right? Cool. Nice. Good. And if we're looking now at executions, like this, if you want to consider this to be the same execution as this, and you classify the data or you classify them both under the same data, under the same execution, then it's a bit flawed because the conditions for this to occur and for this to occur and to have the same target are very distinct because this whatever entry one is actually a bullish to bearish transition, whereas this is a bearish to bearish transition. So like you could consider them to be both the same model, and maybe in theory you are trading the same model, but this is like the problem I'm having, or like the problem I'm trying to solve is like the issue with assumption, right? That we assume a lot of things, and even though we consider our methods to be mechanical, then there's still room for discretion, right? And having two executions like this that you would consider the same, but yet have very different properties shows how much is being assumed. And if we don't account for that assumption, then if we're trying to track the data and make the models better or make the models more efficient, then it makes it very hard. So you could be profitable and still have this issue. Like I honestly, I'm willing to bet 99 out of 100 traders have at least a bit of assumption that they do not realize that they have, right? Maybe that 1 out of 100 does understand that they have a lot of discretion in their model and they're honest with it. But then again, if they are honest with it, then what is their adjustment now to try to improve the models, make the models more efficient, et cetera, et cetera? So these are like the questions that I'm trying to solve, right? So although they are both good trades and although you may be profitable, right, the ceiling now is kind of there because you're considering both of these to be the same without acknowledging that there's different properties for each, right? And if you solve that, or if you could begin to find a way to interpret that differently, or at least acknowledge it and then try to adjust with it, then improving the models then becomes viable, it becomes testable, it becomes actually doable. You can actually do it now, right? Because let's say this is model one. Let's say this could be model one version one, this could be model one version two, right? And then now you can have an LGC1, LGC2, or SD1, SD2, right? And that's kind of what I want to get at with what that's kind of like my end goal is like, yes, we have all of the models now, and there's not really another model I can create with the concepts that I use, right? At least from a market structure perspective, but I can have different variants of each model, and they would match different conditions, like an LGC or like an SD from a scalp POV that occurs after a swing high or low is taken is very distinct to an SD that is based on a continuation of the major intraday, right? And if you're able to internalize and understand that, then I guess you can start to open your mind up now to trying to build variants. But yeah, let's go ahead and move on. It's easy one here, bro. If you have bearish structure, you have CBOS unwillingness, and then now you have a break of structure here, then this internal is bullish. Therefore, low, high, low, high, low. This did not solidify. This is a sweep, not a break. So if this would have swept here and then caused this break, then I can now be bearish. At least from a conservative standpoint, right? Like here, you're just not bearish at all. You're trading against the internal bullish move. Yeah, you see. So I guess this was here, right? The internal is bullish. This swept, um, and then it didn't provide any type of transition. So obviously, it's then continuing higher. So now once it's continuing higher, and then you take out the low that led into the high, fully take it out here, right? Then now you can start to find some type of entry. But now it's like your target. your target has already been swept. And we've talked about this countless times. Like if your target has already been swept, then this no longer becomes viable. Because what are you aiming at then? If your target has already been met, then there is no target to go for. Mm, good, good, good. Let's see. Um, and control FOMO psychology. Yeah, and like it's not even a psychology thing, bro. This is 100% a technical issue. Like this is a rule set issue for sure. Yeah, exactly. Like if you're already at your destination, like where are you going to go after that? Like you then need to see something else. You need to find a new scenario. And usually when that TP happens for me, because because once that TP kind of just occurs, like it it's just my reason to just not even look at it anymore. Like after that, like it's gonna take way too long for a setup in the opposing direction to work out. Um, if it's already been concluded, especially if we're already kind of not overextended, but from the external POV, this also already completed. So if this already completed, then I'm not trying to look for a reversal, and I'm also not gonna trade the immediate continuation because the objective has already been met. So let's say this break here had an internal transition here. Let's just say, let's say you have something like that, and it hasn't broken this low, then okay, perfect. I now have something to play off of, and I have an objective to meet. Yeah, yeah, it just yeah, lack of clarity pretty much is like the easiest way to put it. um, oh yeah, and Jalen, I think Brendan responded to you already, which is cool. That his response is cool. I'm not gonna show that, but the reason why Brendan is like the reason why our styles align is not obviously not just because like he trades some of the RCV concepts, but it's always fundamentally a mindset and like your ability to break things down and then from there begin research and actually have good quality research. That's I think one of the best bases someone can have. Have just knowing how to do that is going to put you way farther ahead than most people in trading. What to look for, when to look for it, how to look for it, and then how to validate it. Um, but yeah, let's see. I think there's a couple of things here in the group chat. How we were bullish. I'm not saying we're bullish. I'm not saying that. Oh. I mean this. Oh, I mean, well, bro. If you want to play an external move, then your internal has to be timed. And if your internal is not timed, then you cannot play the external. So like, you clearly have a break of structure here. We didn't break a low. Therefore, you have unwillingness. So, in order to have unwillingness, you have to have internal bullish structure low, high, high. Here, we did not break a low, but because we technically did on an internal time frame, I could definitely see why somebody would play something like this, right? And if you do, then the only other reasons you can point out as to why it failed, for are one, the momentum into the POI, and two, the reaction of the POI. But like that's not even that's like kind of besides the point because this happened after your execution. Like where you're wrong is unwillingness, internal bullish, internal bullish. So until you see something fail, you cannot really justify that because like let's say this here too. you have that break, but like you also have to consider this is because you're internally bullish and you have no disruption, then this is what's in play. So like also from like I don't even know, maybe I don't even know where we are from an external POV. Like you're just showing me M1. Like I don't know where this is at, like on a H, like on any kind of intraday POV. Like how do I know this isn't super deep into the bearish side on a from a major intraday slash swing, right? Because if you're overextended, and I mentioned that in one of the, and I think the first case study of this week is like what will you define as a mechanical way of saying an overextension, and I gave like two definitions for that. So like if you want to go see that one, but yeah, we can go ahead. Whose chart is this? What chart are we referring to here? Oh, my bad. I'm done. My bad. Oh, I hate this term. Hate that term. It's so that's one of those, hate that term. It doesn't make any sense. Change of character that does not relate to structure. Um okay, let me see. Hmm. I guess this is a good example of being overextended. It's like this is something that I also want to figure out how to quantify is like how many legs down from a specific structural level have to be present for something to be at least assumed to anticipate an overextension. Because like very clearly once we see a bunch of legs down and the distance between new lows is like smaller, then clearly price is slowing down, right? And you would have to validate this with like the immediate structural level to the upside, because if you validate it, then it may not make sense to sell here. Like trading is not just high, low, retracement, continuation. You have to understand the relationships of it, because the internal is also highs, low retracements, but then these externals then create the overall picture as well. And the flag is created, sure, sure, but a flag, like in theory, yes, it is a flag, but I want to make that, I want to build a relationship between the concepts that we use and those types of patterns. So like what relationships would I have to build, right, to consider something to be a, oh, that's cool. Oh, never mind. What kind of relationships would I have to build with the concept that we use to consider something to be a a flag? You see what I mean? And like, and really like I don't want you guys to think that I'm overcomplicating it, because if anything, the overcomplication is the simplification of the concept. Because we can, if you leave room for assumption, then you leave room for error, right? And if there is error, then at least I want to be able to figure out why, or like how to either remove or add something to eliminate that error, right? So whenever you're trying to figure this stuff out and thinking about this for yourself, it is complication in terms of articulation, but it's really simplification of the bigger picture. Like, what are you bringing this down to from a first principles POV? So like I said, just because we've seen like so many legs down, and also like I know where USDCAD is. Like I'm not gonna be stupid, but like I'm trying to play based on what I'm shown here, right? Like I'm not just gonna be ignorant and be like and not know where USDCAD is because I look at USDCAD and we talked about USDCAD last week. Um, But yeah, like, and then we're sweeping low. So like, this is I want to say this is I'm not gonna say overcomplicating, but over refining for sure. Because if we're seeing so many legs down, right, and the distance is getting smaller, then if I'm looking at low, a high, low, maybe potential retracement, CBOS, we clearly have a solidified high here. That solidified high is then broken. So then we are bullish, at least to here. You see what I mean? This is not LGC at all. I guess, but like, this is all like, I also like consider this to be my fault because I'm like, I also say like continuations over reversals always, like always try to force the continuation, but there's a lot of nuance to it. But that's my fault for assuming that other people would see what I see, and then that also roots to the problem that I'm trying to explain. Um. So yeah, like, because of that alone, right? And not to mention, this isn't even a model. Like, if I want to consider this to be bearish, okay, if we have a solidified high be taken out, then technically we have CBOS. This is not reversal BOS. That's another CBOS. Reversal BOS is here. So because I have a bullish range. So now I have a pullback. So in order for me to be bearish, I need to see this break. If that breaks, then I am technically bearish. But I don't know what happened though. Like, when was this? It was today. Where's that been? You see what I mean? Like, you see what I mean? I actually didn't see this, but like, this is what I mean. Like, if you're overextended, and then you have solidified high be taken, then you have to be bullish. So yeah, here we go. I think this is kind of where we're at. See, that's why I said, like, in order for us to be bearish, this needs to break. If this does not break, then we are bullish because the solidified high was taken. So then, if anything, this is LGC. You know what I'm saying? Like, but honestly though, like, I don't think this is a tradable scenario for me. Um, I would like to see like an internal LGC to justify the move up.
Hey, Freda, what about this?
Uh-huh.
Go back.
Um, as an entry,
Yeah, as an entry
based on
a-
what?
after the LGC.
Where's your POI? What are we basing this off of?
Maybe the full sell to buy.
I would do that if this broke.
Okay.
Yeah, like here, like, and this is why, like, this is why we could break it down even further. Like, no, don't hold on. I'll tell you why. Because obviously, like, this is the if we're to consider the solidified high break on the scalp to be broken, the solidified high, therefore making this internal bullish. In order for the bullish range to pull back, you need bearish structure. So technically, this is internal bearish structure, right? So because this is internal bearish structure, right? Internal bearish structure, therefore we have high, low, retracement, and then it's until that breaks, right? That is then considered to be unwillingness here based on high, low, retracement, unwillingness break, because then this unwillingness and shift into bullishness aligns with this potentially being an LGC, but no, but more importantly, it's what validates this as a confirmed low, because obviously based on the internal, this range being broken, right, there's now a solidified low, but then this internal transition that would have been here on the 30-second, and once that breaks, then now we are confirmed to be bullish, because then that would trickle into the M3, M5, because then that would trickle into this being now a full low from a intraday standpoint. But like obviously that's not confirmed until this breaks, right? So like if we wanted to be conservative per se, um, to me there is just no entry here, at least not from a conservative standpoint. Yeah, I
Would you
know.
mind?
Hold on, bro. Hold on.
Sorry.
Uh-huh.
Would
No,
you mind
sorry,
pulling?
sorry. I was talking to the guy in the chat. Sorry, go ahead.
Oh, would you mind pulling mine back up on the Discord? Because I kind of like did a. I don't trade this pair, but I kind of put my own spin on it. It was the one you opened first, and you were like wondering what it was. That one right there. Up, down. TK or typical night. Yeah. So go to the next picture.
This one?
That's kind of how I read it. If I was to force an entry, that's kind of how.
Yeah, yeah. I mean, I am seeing that. But this is like a, you have to be pretty much perfect here with, because you have like 30 seconds to enter. That's like the only bad side to it. But yeah, it's justified because, but you would have to understand that this justifies this bullish move, which would then justify this bullish move, and then that would justify the overall leg to have stopped.
That's pretty much
So like,
exactly what justified it, because that's a double. In my
yeah.
opinion, that's a double engulfing. That
Mhm.
initial one, and then the five engulfing as well.
Oh, okay, that's good then. The engulfing is good, but from a structure POV though, this kind of justifies, this break justifies this is unwillingness from the micro standpoint, as this unwillingness based on the micro standpoint. But then that validates the timing for the break of, or this internal break. But then this confirming this confirms this, which then means that it confirms that this low as like the overall halt to the overall bearish move. Does that make sense? Like it's kind of like the internal. This is what's validating this, which is what's validating this, right? And if you're able to keep track of all that, then taking precise moves like this is actually like worth holding. If you were to take it like this, if you're considering every other aspect externally, right? Because like I said, your entry is here. So this is validating the unwillingness, which validates the internal bullish leg as the full-on shift for this, which then means that this is the overall halt on the entire bearish move. So you pretty much, this is the perfect entry, or the most conservative entry, to catch the reversal. But like it's, you have to be pretty much perfect in these kinds of scenarios, because you can't be bearish if this is overextended, but you can't be bullish yet, right? Obviously here, right? And then there's not really much to play off of here unless you're playing the entire buy to sell to buy, sorry, which would be like this, right? But then I still consider that aggressive because the range is bearish. So it's not wrong, just slightly tad bit aggressive. Okay, bullish. You have a bullish break, meaning CBOS continuation. internal sweep. This is a bit aggressive, but the only thing that's saving you here is like this internal break. I consider it aggressive because we haven't fully broken the slow, because then this would mean as long as it doesn't break the slow, then we can consider this to be viable. But you're kind of focusing on the micro, which is fine. And you should also note this. This is actually pretty important here. But yeah, it makes sense. It does make sense. As long as you acknowledge that this internal sweep, like maybe like an M1 30-second, if that then confirms a 30-second structure break internally, then yes, it would validate this as a potential sweep, which is then validates the POI, which then validates your bearish bias. Yeah. You see, so yeah, so you see this is now a little bit more viable once you break this, at least from this time frame. Just going off the time frame. That makes a little bit more sense. But then if you're a little bit more conservative, then you can just trade the entire buy to sell. And that actually I think is like a 71 retracement maybe. What about this? I mean, that's kind of what Brian had, but like it's kind of what Brian had, but you just have to understand that like this is like a reversal, like this is hardcore reversal. And like I just would not advise to like try to base a model out of this because you have to be very perfect. Like you want to catch a transition, but you want to catch a conservative transition because then you're being conservatively aggressive. Bullish, sure, sure, but if we zoom out a little bit more, this is overextended too. Like if something's been bullish for a long time, like I don't want to keep being bullish because I want something to fail internally, which means I would need a opposing move, which is bearish, to fail to then continue the external bullish. You see what I'm saying? Like this is what I'm saying. Like this is something I find hard to explain sometimes. You see? So okay, bingo. Your scenario failed, right? The scenario failed. You wait for the failure because then the opportunities will present themselves. This is extremely aggressive. I would not take this one at all because I would not take this one at all because internally this has to be bearish because it broke structure. So because it broke structure, the internal of this bearish pullback, this is then CVOS. So you're assuming that this is going to be the confirmed low, but really, I'd rather see like a solidified high that be broken, and then you go for the continuation to the upside. And if you don't get it, you don't get it. Like I'd rather miss a trade that doesn't fit a conservative criteria, or I'd rather miss the aggressive scenario if it means winning more conservative scenarios because that has shown me to be a lot more effective. But obviously, like for you, it could be a little bit different. But this is a bad move, and this is aggressive in my opinion. So like if you want to follow the bullish bias, wait for the bearish to fail first. And if the bearish fails, then you can then find a bullish opportunity because it has to mitigate. At least most of the time. AJ. Nice little LGC. Nice little LGC. So this is cool because this LGC sweeps a solidified high. So because this high is solidified, right? Then this is broken. Then that means that you have solidified this little range. So because that little range has been solidified, then this is a confirmed pullback based on this break, which makes this a viable move. But you have to acknowledge that it's a solidified high that's being swept. If you don't acknowledge that it's a solidified high it's being swept, then you can't acknowledge that this is a range. or at least this is a pullback, right? Because if I'm being also a little bit realistic here from my POV, I also like that this is being topped. So if this is being topped, a solidified high is being swept, and then I have the LGC, then I now want to see, where I can take my position from. But the invalidation, technically for me, still has to be here. Because what is this, M1? Yeah. If anything, the micro can fail, but the scalp can then still be confirmed there. So it's just a question of, does this sacrifice and risk to reward present yield that makes you want to ignore the overall invalidation? That's like the question I would ask you. Okay, I like this one. This is much better. Much better. Okay, so bullish range, unwillingness, break of structure, but this could still be interpreted as a pullback. So it's nice that you waited for this, right? And then notice again, if we're then looking at the internal, this is solidified high. Once again, solidified high being swept and broken through. And then you're kind of just looking for, right, the internal buy to sell. So this is much better. I hope that you aim for this, because that's what I would have aimed for. Yeah, I think so. But yeah, this is much better. Because there is the buy to sell, and from the internal leg, this is considered a premium. Right, so realistically, similar setup from the entry criteria, but notice that it's actually very different in terms of scale. And by scale, I mean the relationship between the distance here compared to the rest of the moves, compared then to the relationship of the distances here compared to the other moves. Because really, like, if you want to break down manipulation or a liquidity sweep or something like that, it's something that's fast. It's something that takes something out and then it goes in the opposite direction. So if it's not all three of those categories, or it doesn't fit those three categories, and it's most likely not a manipulation, and you're kind of forcing something. Like this one seems a whole lot more forced than this. You see, this one also seems a lot more forced. This is like the first scenario. It feels really forced. Because price is kind of condensing. So if you're letting price condense, then you're open for manipulation to then go higher. Right. And also, like, yo, like, where the fuck are the losers, guys? Like, what is going on here? Like, are you guys not tracking the losers, or like, what's going on? Okay, this is good. I like this because there is a premium. I mean, a discounted pricing, and then you aim for equal highs. Nice. Uh, but really, if I'm looking at this now from the continuation standpoint, once this is swept and you're tapping a POI, then if price is to return to the buy to sell here, which it didn't, then I would have wanted to take that, right? But then I can't take this POI anymore once this breaks. So like missing out on this trade would prevent me from taking other types of losers that are similar. You see what I mean? No, you see, so you see what I mean? Is that the same one? Is it the same pair? Gold? No, this is a different pair. So internally bearish. Solidified high. I would not consider this bearish. I mean bullish, sorry. Without that even breaking. So then let's say if this is to break, like this is not a bullish break of structure. This is a CBOS of this leg. So we have CBOS pullback. So I'm expecting this to continue lower, right? I would just need to fit the narrative into that. And so this is irrelevant to me just because of this external leg. So then this is now an LGC. Okay. This is similar to that one trade that somebody said. Okay, where's the after on this? Can you point out what made you lose here? Do you think you can point out? There's like probably one singular reason why you lost here. In the middle. No, well, I mean, I wouldn't say not in the middle of nowhere. It's just you didn't break the slow. So if you didn't break the slow, then the order flow is not sufficient enough for you to want to continue lower. So that way, I would want rather to this be swept and then have a transition to then have a POI to play off of. Yeah, this didn't break. I mean, technically this broke maybe on the second time frame, but if this didn't break, then we have pending equal lows. But you guys know that liquidity is not it doesn't influence bias. It's just a target. And five. Yeah, I guess this is one of those bearish move. CBOS. I don't know. I don't know if that swept or not. Let's just assume it did. Then LGC. So then the only thing that I don't like about this scenario is like the bullish momentum here. Oh, okay. You guys are before the momentum. I mean, on the M1, if there's high momentum here compared to this, then it's kind of the same principle. Okay, let's see. Yeah, bro, this is automatically throwing me off here. That's automatically throwing me off. I wonder if there was like some type of divergence here with like S&P or something. But yeah, this looks like it's just market open. I don't really like these market open strategies most of the time. I don't feel like they're as consistent as people seem to like treat them as. I would much rather like let's say wait for all of this to play out and then see if there's an opportunity later. Yeah, you see, like if I wait for after that, we're then sweeping, we then have the external premium being tapped. And then from there, it's like, okay, if we then have an LG, then okay, now you can probably justify a move as long as you have then maybe because there's no POI, then there's now right another potential scenario. So then you have the whole buy to sell, and then you have like an external target because the external was bearish. I don't know. Like, I'm just not a fan of these like these market open scenarios. Like, oh yeah, yeah. I'm just not a fan of these. And like, I heard that I think it's Nasdaq that's going to be like 24/7 now. Personally, I don't think that's going to make a difference. I think this is still gonna happen like on market open. I just think market open is like hit or miss. So like I don't have to trade when the liquidity is immediately coming in, but just kind of play based on that. Because if you go back to the first one, I guess that would be like the bigger picture. Yeah. Like high, low, this is clearly a premium. And then based on the premium, look for the transition. And then you have a very clear target.
Yeah, I think with that one, the big thing is I saw the move. I just didn't want to miss it. So I kind of FOMO'd
Yeah.
in.
And also like this is like I guess something that to build with time as well is just like we might have swept this, but like from the bigger picture, this is still relatively equal.
I 100% consider that relative equal.
So like that may not be something that like makes that withholds me from like leaving a trade or not entering a trade, but it's just something to consider because then we did come back and top that. Um, but like obviously that's hindsight. But yeah, that's why I don't like trading this stuff either. Like it throws me off sometimes. I have been observing for a good while, 2200 p.m. and 10 a.m. 4 hour candles to give decent plays. I mean, yeah. So that's like that's what I want to be able to like. I want to be able to give someone a platform to be able to prove that. If you can prove that, then it's replicatable. But it falls down to the rules. Oh, this is cool. What is this? What is this? Spotware. I've never heard of this before. What the fuck is this? This is cool. Oh, this is cool. I like this. I've never used C Trader. Well, I mean, you're not wrong here. Like, I'd be nitpicking, but it's just like your invalidation is going to be here if you're trying to play this leg. Like, no matter what, your invalidation is there. Like, I see why you're doing that. But to me, I don't think there's a conservative entry here. Like, yes, like you noted the thing, like the perfect thing here. But once you break an internal leg, once you break that, then that solidifies high low. So you broke this, so you have to be internally bullish. So if you're internally bullish, okay, then you're now technically completing order flow here. Okay, perfect. Then from here, I need to, if I want to take the conservative entry, then I then need to see from this POI, all right, I then need to see a low that breaks a high into the POI to be broken to then consider that to be bearish. Like if you want to be like if you want to take the reactionary trade, but like if you just want to take the trade completely, you have a set invalidation. Like pretty much the something you can ask yourself too is like if this trade hits my SL, is it completely invalidated? Yes or no? If it is, then that's your invalidation. If no, then that means your invalidation is wrong. You see? Like because if you trade the external POI as well, like and you're basing this now out of a higher time frame move, then let's just say there's like more targets here. Then you now have something to play toward, right? Or maybe it's down here or something, like you have something to play toward. But you need to know your destination, and then you can't nitpick the entry. And if you're gonna nitpick the entry, then you're gonna have to be super conservative because applying this level of structure to this type of bias, you're kind of skipping a level because you're assuming then that this internal high is going to then reverse. So if the internal level is to then not reverse, then you fail the trade. So you would have to wait for the internal then to shift to trade this. Because if you're waiting for this to give you a reaction, right? And then you try to play the internal of that, then you have to do the same thing because markets are fractal. So like playing this and then trying to play this, and you're trying to look for a internal reaction to validate this, then you also have to play an internal transition to validate this, which means that this has to break, and then you go lower. So if you're gonna do it for one, you got to do it for all. But if you do it for none, then you open room. Smaller risk to reward, but you can play for a bigger target, and then that would even out the risk to reward. All right. So any more questions, concerns, guys? Let's see Discord. Yeah, I mean, we can nitpick too. Like, I mean, even this I wouldn't like, bro. Like, whoever's noting this, like, I would not consider that LGC. Like, just because you're not even breaking the high. You're solidifying the range, sure, but you're not breaking the high. So then you would require this, and then that's where. Is there a way to spot a no man's land early? I mean, if you spot a no man's land early, then it's not no man's land. If you spot a LGC early, then it's not a LGC. It's like anticipating a structure break without waiting for the structure break to happen. Like this entry, like this entry, you're assuming that the micro is going to break based on your point of interest, but no, you wait for the point of interest to you wait for the micro to break to validate the point of interest, and then you play. So like then you validate this entire move by having the low kind of be broken, because that would validate the entry, but then by that time it might be a little too late, so then you have to play the entire buy to sell. Because no man's land just means you're in a range. Like what are you referring to? You talking about UCAD? Like if this was no man's land? I don't think this is no man's land. Like high, broke a low, high, broke a low, um, pullback, technically CBOS. All right, so we have the confirmation of this, but the internal is bullish. So then that completes. So then this becomes bearish technically. All right. So technically this is a bearish transition. But then the problem is, like we said before, it's like we've just had a massive move to the downside. Like, does it make sense to still consider downside moves? So if you guys watched that review from yesterday too, like that's what I was talking about. Because we swept a daily low like here, because we swept a very major low here, it doesn't really make sense for me to try to take an intraday continuation. because I've just been burned way too much. And like now we're seeing it play out, and we're seeing that play out here. You see, like EU is hitting the pretty much very close to TP. This one too. Like I hope this hits like before market close, but what is this gold? Okay. Bullish, sweep. Okay, and then I'm gonna do different color. Not this color. So then internal break, okay. So you're within this range. So we failed to break a high. We broke the internal low, but then we failed to break this low. So like by the time we get to when would I consider this no man's land? I would consider this no man's land once this POI fails to break this low. And then once we break that, then we fail to break this low, which is then once it starts coming back up here. So pretty much around this range. Like I'm just like, yeah, I'm not looking at this anymore. Like it's kind of pointless. Asia session from yesterday gold. Yeah, I mean it's Asia session too. Like I don't look at any pair but UJ and like Asia session. It just statistically doesn't make sense. But yeah, I think that's good enough for today, guys. Any more questions? Anything to catch up on? Also, this is a I think this is an OG RCV member. This guy's been with us for like years. Nice free game. But yeah, I think that's good enough for today, guys. Unless you have any last questions, concerns. Cool, cool. Yeah, guys, no worries. I'll try to upload this here in like the next hour or so and put all the details in. So